India's power sector is hiding a trillion-rupee secret, and you've never heard of it. Forget Adani and NTPC for a second. The real power play is happening where no one's looking, in three quiet companies: Apar Industries, Skipper, and Voltamp. They don't run power plants. They build the veins of India's electric future: transmission towers, cables, smart transformers. And guess what? Their order books are overflowing, even from the US. But here's what no one is telling you. These companies are about to enter a once-in-a-generation upcycle, fueled by 3.3 lakh crore in power infra spending and the rise of smart grids and green corridors. Let's start with Apar Industries. Ever heard of it?
What if I told you a quiet Indian company just cracked a code that could shape the future of global energy, and almost nobody is talking about it? Apar Industries, it sounds like just another legacy manufacturer, right? Lubricants, transformers, cables, yawn. But what if I told you in Q4 FY25, Apar crossed 5,000 crores in quarterly revenue for the first time in its history? Not because of India, but because of a secret surge in the United States. And here's the twist. They did it while Chinese competitors were being blocked out of the same market. In just 3 months, Apar's US cable business grew 268%. Their conductor exports to the US up 229% quarter over quarter. Why? Because America needed someone to help build its next-gen power grid, and Apar had everything ready, from solar cables for Microsoft data centers to high-performance transformers for electric grids. But that's not the mind-blowing part. Right when China got hit with 44-46% tariffs on US exports, Apar's India-made cables slipped in quietly with just 26%. Now Apar's team is embedding boots on the ground in America, hiring staff, securing utility contracts, even becoming a global vendor for Microsoft's US data centers. They're not just exporting, they're infiltrating. Most companies react. Apar, they pre-built the future. They're doubling cable capacity with 800 crores going into a new greenfield plant before the orders even land. A secret oil export terminal near JNPT for bulk shipping, specialty defense cables, E-beam solar cables, and 200 kV ultra-high voltage lines, all under development. Why? Because they know the next 5 years will be a mad rush to electrify India, US, the world. But there's one wild twist that could change everything. A tariff war is brewing, and even Apar doesn't know how it ends. July 9th is D-Day, when the US decides whether to permanently raise tariffs on Indian imports. If they do, Apar's margins could take a hit. But, and here's the kicker, India might get an exemption because the US needs Apar more than Apar needs them. And if that happens, this 5,000 crore quarter might look like a warm-up. Apar isn't just riding a boom. It might become the backbone of the world's energy infrastructure. But here's the part no analyst is watching. They've quietly started planning a US manufacturing facility. What happens when an 18,000 crore company becomes a global energy arms dealer? Still think Apar is just a boring cable company? A tiny Indian company just outbid China in America's backyard. No one's talking about it, but they should be. Skipper Limited. Ever heard of them? No? That's by design. While everyone's distracted by tech IPOs and flashy EV startups, Skipper just pulled off something incredible. They've quietly become the largest transmission tower manufacturer in India, exporting to over 50 countries. And in FY25, they landed their first ever multi-million-dollar contract in the USA. Yes, America. But here's where it gets wild. America is desperate to upgrade its power grid, but there's a catch. They don't want to buy from China anymore. Trade barriers, tariffs, national security risks. Enter India's Skipper. Their timing, perfect. They saw the gap and went for the jugular. In FY25 alone, Skipper's revenue jumped 41% to over 4,600 crores. Pat doubled their order book, a record-breaking 7,458 crores, the highest in company history. And in Q4, their pace spiked 90% year-on-year. That's not just growth, that's a takeover. But still, no headlines. Why? Because while others post on LinkedIn, Skipper builds. They're rolling out 75,000 metric tons of new engineering capacity this May. They're deploying SAP S4HANA across the enterprise. They're not reacting to demand. They're preparing for a power infrastructure boom across India, Africa, Latin America, and now North America. And just wait till you hear what they're bidding for next. India's power transmission network is about to explode. The government plans to invest 9.15 lakh crores by 2032 to support renewable energy, 500 gigawatts of it. That means more towers, more substations, more EPC contracts. And guess who's already building the 800 kV Kavda HVDC line for Power Grid? Skipper. They're already in, already winning. And now, they're entering the gas pipeline business. Quietly, strategically, using the same HDPE infrastructure they already have. They've even solved one bizarre problem: rodents chewing through pipes. And the real kicker? This company, which just secured the US, transformed Indian T&D, and launched a new segment, is still under 5,000 crore in the market cap. Still think this is just a boring power company from Kolkata? Watch this space. Skipper just switched on in the future.
Voltamp Transformers Limited is a Baroda-based company and is mainly into manufacturing of various types of oil-filled power and distribution transformers of various classes. The company has a clientele of more than 1,000 customers across various end-use industries, such as power, oil refinery, textile, chemical, real estate, automobile, infrastructure, and steel, including Larsen & Toubro, Technip, ThyssenKrupp, Toyo, Petrofac, Engineers India, Tata Projects, Thermax, Siemens, ABB, GE, Hitachi, etc. Quarterly performance analysis. Revenue, 625 CR, highest in the last 5 quarters. Stable margins. OPM remained fairly stable around 18 to 20 cent. Net profit rebound. Mar 2025 net profit at 97 CR was the highest quarterly profit. Annual financial performance. Revenues CAGR FY22 to FY25, 19.8% net profit CAGR, 35.5% CAGR, indicating strong operating leverage, improving operating margins. OPM improved from 12% in FY22 to 20% in FY24 and maintained at 19% in FY25. Voltamp Transformers Limited is a fundamentally strong, efficiently run, debt-free company showing consistent growth in revenue, expanding margins, strong earnings trajectory. Chat key strengths: debt-free, cash-rich balance sheet, strong ROCE and working capital efficiency, minimal financial risk with a clean asset base, well-governed with continuity in leadership and conservative capital allocation.